From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 7, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here on the USDCHF, the US dollar versus the Swiss franc. Over the past 5-6 days or so, we haven't really seen a lot of change out of this currency pair. We did see a little bit of a boost for the US dollar on last week's NFP data that we had, but it really has found a resistance at a very familiar place. You look at the yellow shaded area right in the middle of the chart. That sits between 97.15 and 97.30. We have seen 1, 2, 3, 4, 5, 6, 7 days finding some resistance right around this 97.30 level. Nothing new today. What we're going to need to see, if it's going to continue this bullish pressure that we're seeing right now for the dollar franc, we need to see it break above that yellow shaded area, which it really hasn't done yet. It's challenged it, it's tested, has so far been unable to stay above 97.30. You follow it back in time, you see some historical resistance, support, resistance, support all along that yellow zone. So it'll be imperative to continue the upside. We need it to break through 97.30. Then of course we'll challenge the 100 period moving average, the green shaded area, up into towards the 9800 level for the dollar franc. On the other side of things, if it does not have enough momentum to break through there, if it's just a temporary push higher and we look for a turnaround back underneath 97.15, we possibly look for the turnaround back towards at least the blue shaded area, a lot of resistance and support around that blue zone into the 96.80, 96.60 level. So that's a significant area to look at. I do want to do one thing. Let's see what this looks like. Let's take Fibonacci, top of the black trend line, all the way up here at the top, down to the current lowest low on the chart. Well, that's very interesting because that puts the 382 Fibonacci retracement level of that range, just that black trend line, right here at the blue shaded area, 96.90. That's where we're finding support right now. We're above it, and the 50% sits right at the green shaded area. So I wouldn't see that it'd be too difficult above 97.30 to make it back to the green shaded area and the 97.70, 9800 level for the dollar franc as we go along through this movement higher. Let's move on over to the EURUSD, the euro versus the US dollar. Of course, like I said, the boost of NFP last week gave this the US dollar a nice little bump on Friday. We see that red candle represented here of that bump for the US dollar from the pink zone right about 1.1870, 1.1845 back down into the mid to upper 1700s, 11790s, the top of the blue shaded area. So fall from the pink zone down to the blue zone. If we're going to see it go lower, it's going to be an imperative. Breaking through about in 1.1750, 45, that's the bottom of the blue zone. It will need to break that blue zone if we're going to see this continue to go lower on the euro dollar, but a stronger U.S. pressure back down towards the 1.1600 level or so will be our next target lower, the yellow shaded area. The blue zone, of course, holding support right now. If it holds that support, we may see, especially if the dollar sells off again, another challenge back into or just underneath the 119 level. 118.70, 45 is the pink zone at the top of the chart. We zoom it in a little bit and you can see that really reflected over the past 5 days or so. 1, 2, 3, 4, 5, really 6 days. If you don't count today, 5 days, but bouncing around between the blue and the pink zone. If it's going to go lower, obviously it needs to break the blue zone. A real short trend line, you know, just taking it from this area right here and just representing this run, we're right underneath that. So again, that gives us some confidence that if it stays underneath 118, we might see some push lower, but let's not get excited about it quite yet until it gets through the mid 117s for the euro dollar. Moving over to the GBPUSD, we have seen a much more significant pullback here for this currency pair. In other words, the US dollar gaining some strength against the British pound. We can see that reflected with the past Thursday and Friday, actually, a nice fall for the currency pair, but let's not get too excited again, because even though it has fallen back down, it's still well within the parameters of the uptrend. If you just really look at the red trend line, that is the uptrend, okay? We see higher lows. Let's put a couple of black X's here. Here's a black X, a low here. Here's one here. So we have two rising lows. And really, if you look at today's low and Friday's low, we're still in that pattern of the uptrend. So let's not get too excited about this until we see some further evidence of reversal. Lower highs, which we don't really have a lower high per se as a significant resistance like we saw here and here. So let's consider that. We need to see a new lower high, a new lower low to really start giving us some confidence in the downtrend, if it's going to be a downtrend. And really, let's focus on this. It's still an uptrend for the pound dollar. Let's zoom it in a little bit. We can see some congestion resistance around this orange zone, 130.70, 130.100 in the past. Some support here, some resistance here. So that will be our intraday resistance at the orange zone. Of course, the purple zone, not too hard to see, is our support. A break above the orange zone, we'll look for it to rally higher. Break below the purple zone, we'll look for the continuation lower for the pound dollar. Let's move it on over to the dollar CAD. Nice push higher. We did get some news out of Canada and the US on Friday, both of those giving this a nice surge back higher again. We found support down around 124.30, the orange zone at the bottom. Some congestion around 125.55, 25.15, the green zone. Last week we saw the push through there, and now we're challenging back to the pink zone, 126.40. 1.2680. So again, the pink zone is the main area of focus. If it's going to go down in the direction of the trend, we need to find some resistance, either here at the pink zone, maybe even the yellow shaded area closer to the red trend line. And then we look for some price action. It implies that it's going to reverse and go down. We don't have any price action right now that says it's going to turn around and go down. So let's not get excited about that until we get some of that price action. Until then, we have to consider the fact that this has had a pretty strong move higher, and if that continues, we want to look for support. Well, I think the green zone down around 125.55, 15 is going to be our support, and of course our ultimate support, the orange zone, but we're a long way from that. The green zone will be much closer for us, right around that 125.55 level. One Fibonacci retracement measurement. Let's go from the highest high on the chart, way up here at the top of the chart, down to the lowest low. Some interesting things here is that puts the 236.236 Fibonacci retracement level at 1.2740. That's the yellow zone and closer to the red trend line. So let's consider that, that we might see it pressure a little bit higher if it breaks through the pink zone, which it obviously hasn't broken through 2680 yet. So we need to get through there if it's going to go to the yellow shaded area for the dollar CAD. Otherwise, turning back down from the pink zone may see another challenge of the green zone into the mid 125s for the dollar CAD. Moving on over to the dollar yen, USDJPY. Look at this. Let's take this black box, and I'm just going to pull it right here. Let's pull it down here like this and take a look at this. Today included 1, 2, 3, 4, 5, 6 days. We have been now bouncing around between the yellow zone as support, the pink zone as resistance. I think the pink zone is our main area of focus for the day today. Staying under it, as it has for the past 5 days or so, we find resistance. And only if it breaks above the pink zone do we look for it to go higher. The pink zone is 110.90, 110.65, right in that area. We're above the, let's take this Fibonacci and let's pull it down to the lowest low now, just like this. And we're just challenging the 236 fib, 110.94 of the blue trend line. Highest high, lowest low, 236 fib, 110.94, top of the pink zone. So it needs to break through there if it's going to go higher. Let's zoom in on that a little bit. Here we go. So Fibonacci, highest high, lowest low, top of the pink zone. That's our resistance. 1, 2, 3, 4, 5 days now, finding 6 days now, really, finding resistance into the pink zone. Only buy this if it breaks through 110.90, and I mean a breakout above 110.90. And if you're going to sell it, I suppose you're at the very best place, lowest risk, highest reward opportunity to do so, but there really isn't any price action yet. That implies that we should be selling this. So maybe a pushback underneath 110.65 gives you some hope that it's going to challenge back to the yellow zone at the bottom of the chart. One thing I want to point out here, we looked at this the last time I was in the live trade room, and that's this black trend line at the top and the red trend line at the bottom. Okay, look at that, rising lows along the bottom red trend. Let me take this red one off. So rising lows along the bottom red trend line right here at the bottom of the chart. And we see falling highs along the black trend line. So we're consolidating really between this larger range here on the daily time frame. The blue trend line is really top to bottom of that. And so if it turns around, we might even see it challenge all the way back up here into the 113s again for the US yen. Moving on over to the AUDUSD, Australian versus the US dollar. Look at this noise that's going on up here at this orange zone. 7,900, bottom of the orange zone, 79.55, top of the orange zone. We may try to split this up a little bit later on today in the trade room, take that orange zone and make it into two. But right now, that's the area of support. The blue zone is our major area of resistance, or at least close to that blue zone. I think we're going to do some work to clean this up a little bit later today. So if you want to see that, join us in the live trade room. But 7,900 looks to be like a significant support. And if it stays above it, we might see the turn back higher again. And breaking underneath 7,900, we look for the continuation lower. Let's zoom it out a little bit more, and you can see how that plays out in the larger scope of things. We're at the top of the trend, so watching for clues to reversal may still be a possibility, but we also want to note that the trend hasn't really changed here for the Australian dollar. And lastly, moving over to the NZD USD, a pretty significant drop-off we've seen here for this currency pair over the past week or so, week and a half. Now pressuring even lower and challenging the blue trend line. The last time we challenged it, turned around and went back up, so we're challenging it now. So let's wait to see. If we're looking for it to go up in the direction of the trend, we need to see something similar to what happened right here. And I'm just going to put a black circle here. Give me just a second to draw this out as a circle. But what I'm going to do is put this little black circle here and show you this is what happened the last time we challenged the blue trend line. We saw a dip, green zone, sudden reversal, 2 days went back up, dipped to the orange zone, and then continued. So we don't see anything like that happening. So buying right now, even though it's touching the pink zone or close to 73.50 or so, we haven't really seen any evidence that there's buyers. There's no evidence that there's buyers here. So that's what we're going to wait for before we look for a buy. Evidence of buying pressure. None of that yet. Selling pressure clearly is there, but we want the best time. We don't want to sell it at the bottom. We want to sell it at a higher price. Remember, if you're going to sell anything, you sell it at a higher price. So I think it would likely need to come back to the blue zone, 73.85, 400, before we would think about selling it. Zoom it in again now that we've seen that wider view. And again, I think if you're going to sell it, you at minimum want it to come back up to the blue zone. If you're going to buy it, you're watching for evidence of support and reversal from the pink zone for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.